Ready.
Awesome. Right, boys and girls, welcome to the top producer interview for the Mortgage Mastermind Group. I'm Paul Baxter, here with founder of the Mortgage Mastermind Group and mortgage guru himself, Mr. Chad Bates. And guys, we've got a fantastic class for you today. Today we're going to be talking about a program that everyone should be really paying close attention to. It's the FHA 203K program, the home renovation program. We're going to talk about what it is, how it works, how to market it, how to get it out there that you do it, and how to actually, I know it's funny to use the word streamline the process in a program that has a thing called streamline in it, but how to streamline your process and make sure that you've got checklists so that you can get these done without the hassle. The big thing that I hear all the time is, wow, they're fairly difficult loans. Well, because there's a few moving parts to them, but if you have processes and things in place to be able to do them efficiently, this can really be a big time growth strategy for your mortgage business. So that being said, I'm going to ask Chad some questions, and we're going to look to him for some insight on how he at Legacy Financial Group and how their team are putting together and marketing these loans. So the first thing we want to find out about is, what the heck is an FHA 203K loan?
And Paul, essentially, let me just recap what you just said. You know, at the very top of our screen, we're looking at strategies, systems, implementation. And you're right. Most loan officers, if you say something about 203K, they're like, oh my gosh, I tried one time. It was a nightmare. I blew up a relationship over it. I don't want anything to do with those loans. It's a matter of educating yourself and having the right systems and then implementing them. So why do we need 203K loans in our portfolio? Well, I'm always wanting to differentiate myself from my competition. And I also like to go places that other competitors don't go. Now, one of the keys for this is we have the ability to do these loans turnkey, start to finish, in-house. Now, the reason a lot of people say they're nightmares because they try to broker these loans, and it's a 60 to 90-day process. They don't have any control. They don't have the checklist. They don't know what they're doing. You can get control of this with the right checklist, the right strategies for marketing, the right systems to process and close the loans, and then the right implementation steps. So 203K loan essentially is a renovation loan. Now, this is not a second lien home improvement loan. For those of you who are not aware of what a 203K loan really is, it is a full refinance of the existing balance if it's an existing home or a purchase loan, and then you add to that the amount for the improvements.
And so that was one of the questions I had was, is this available for not just refinance situations but also for purchase situations?
Up to and including the full FHA limit in your individual market. So we're not talking about $20,000 or $30,000 loans here for home improvement loans that people say I don't want any part of. We're talking about a regular size loan for whatever's, you know, again, within the limits of FHA limits in your individual marketplace.
So like in Florida, that's up to $417,000.
Yes, we're not talking about little loans here. I mean,
wow, okay.
And we're going to talk about later, as you already know, Paul, I mean, the demand for these are huge. So you want to be an expert in this. Trust me, y'all. I mean, there's two niches that I really have in our strategy, because why do we need to look for new niches? Well, interest rates already have increased some. The refinance market is gone. We need to identify something else that will insulate us from the cycles. And as interest rates go up, people generally stay in a home and renovate it as opposed to go out and buy a new home. All the more reason why this niche needs to be something that you're a master at. And the other niche, we'll have a separate class on this, but I'll just go ahead and dangle a little carrot there, is reverse mortgages because of the aging population of America. But today we're going to focus on 203K loans.
Excellent. And I know that there are two different kinds of FHA 203K loans. You've got your full FHA 203K loan, and then you've also got your streamlined FHA 203K. When is one more appropriate than the other?
Well, I tell you what, why don't we, just to add a little more variety, why don't we unmute Joy Bates, my wife.
Let me get her real quick.
Who is a master loan officer that is really She does a lot of 203Ks, and let's just get her to explain the difference between a streamline and a full.
Excellent. Joy, can you hear us? Are you on the line with us?
I'm here, yep.
Awesome.
Okay, for everybody on this, I'll try to talk kind of slow because the difference between the 203K streamline and full is, it's very, very important that you understand the differences. So I'll start with the full. The full 203K is if there's any sort of structural work to be done, including foundation repair, that's considered structural, the loan has to be the full. It cannot be the streamline. And on the full 203K, you can do, room additions, you can do kitchen remodels, you can do bathroom remodels, you can take down walls, just whatever you want to do. There is no maximum on the dollar amount other than the FHA loan limits for the county. Certainly you'll be subject to what the debt-to-income ratios will allow, so you need to check that out. But on a full 203K program, you do have to have what's called a consultant. There are 203K consultants in every state. We have a great one here in Texas, so anybody in Texas, he's actually down the street from us, but he has consultants that work for him all over the state, and that's all they do is consulting for 203K loans. So
okay, Joy, let me stop you on that very, very important point. So tell us what a role on a 203K that a consultant does.
What the consultant does is they will go out at the beginning and do an inspection of the property, so your borrower does not have to pay for a separate inspection. That's real, real important, because that's going to, that's going to save them $300. This consultant that we use in Texas is $600, and that includes the inspection. He goes out at the get-go and says, here's what I think you should do to this house, gives the client suggestions, tells them what can and cannot be done in the 203K full. He also administers all draws, or not administers draws. We actually administer the draw, but he approves the draws. So as work begins, and this is one of the biggest differences between full and streamline, when you close your full, there are no draws at closing at all. There is no draws to the contractor until some work has been done. So
that's an important point. So
that's a huge point.
Yeah, that's a really important point. So I'm glad you brought that up. So part of what you have to be able to do is know these little gotchas, and you need to be able to educate a contractor to make sure that they understand they're not going to get money up front on these jobs.
They're not going to get money. They will on the streamline, but not on the full.
Absolutely.
So on the full, and I'm going to talk about general contractors here in a sec, but for now we're talking about full. So you have to have a general contractor in addition to your consultant. The consultant, after closing, will go to the property when there's been some work done. And the consultant generally recommends that the first work being done is kind of the cheap work, the tear out, maybe some paint, just something to show some progress so that a first draw can be done. The consultant goes out and says, okay, I see progress, draw number one, I'm going to authorize. And so then we administer that draw. And then there can be up to 6 draws, including the final, on the full, and the consultant goes out every time.
And like you said, there's no limits in terms of how much improvements. Obviously, the house is going to have to appraise based on an as-completed basis, but you could add square footage. If you have, this is a really neat little marketing niche, you could do a separate video message to your referral partners or all the realtors that you're targeting, talking about, do you have a house that's listed for sale that may have some foundation issues? If the seller doesn't have the funds to repair that, we've got a loan program where we can provide foundation repairs as a part of the purchase money loan, and that's a really key little niche there that, again, just kind of get you out there as an expert.
Right, because as we all know, when our clients go out and look at a house and it's got foundation issues, they run as fast as they can. And so we have to educate our clients and our realtor partners that we have a solution for that. Don't run,
Okay, so let me recap what you've said so far. So on a full, anytime you have structural improvements, which would include tearing out a wall, adding square footage, foundation
repair,
et cetera, that would be considered a full, and you're going to have a consultant that's going to be part of the team. You're going to have a contractor that has enough financial wherewithal that they don't have to have money up front to start work.
Correct. Most good general contractors are going to have lines of credit with all kinds of places. So you have to find a general contractor who has those lines of credit. Also, the general contractors, whether it's full or streamline, have to have $1 million in insurance.
And we're going to go down. We're going to go through that checklist a little bit later on what to get the builder approval.
What they have to do. Okay.
Yes, the contractor approval. So, all right. So let's talk about then a streamlined FHA 203K.
Okay.
When would that be appropriate?
A streamline is when there's no structural work to be done. It's just simply people want new countertops in the kitchen. They want new appliances. They want to paint. They want some new flooring. They just want to spruce up their home, the home they're buying or their current home.
And how much can they do of that type of work without it becoming a full 203K?
Up to $35,000, including contingencies. And let me talk about contingencies. On both full and streamline, let's say your bid from your general contractor and everybody is $50,000, let's say. And that would be full because streamline only goes to 35. You have to have, depending on your company, our company requires a 15% contingency on top of the repairs. So on a full, it would be 50,000 plus 15%. On a streamline, it can only be 35,000, including that 10 to 15% contingency.
And that's a normal thing. And
there's no minimum. Yeah, there's no minimum on the streamline. If they simply just want flooring for $5,000, they can do that. 5,000 plus the 15% contingency.
All right, so a lot of people, and we're going to go through statistics later on, they look at a house and they think, oh, I don't like that green shag carpet and I really want to do a new kitchen. Well, if you market it properly and educate your agents, your referral partners, and your buyers, then don't look at just the cosmetics.
Yeah.
We can help you with all that, right? I mean, even, and I want to key in on one thing, even including a new oven, a new cooktop,
any appliances,
dishwasher, et cetera, microwaves, all that sort of thing can be included. Even refrigerators?
Yes.
So you could build in a Sub-Zero built-in refrigerator and new cabinets and et cetera. So as long as you're not moving a wall, it doesn't cross the line over into the full. So that's where think of structural versus not, and that's the easiest way probably to determine whether it's a full or streamline.
So as a layperson, a question that just popped into my mind, let's say I'm looking at purchasing a house and I know for certain I want to get rid of the green carpet. I know for certain that I'm going to get the horses in the meadow wallpaper off the walls in the bathrooms. But I'm not sure yet whether or not I need a new refrigerator, or I'm thinking maybe of going with a new oven, but I'm not positive yet. Can I do a streamline type loan with the additional contingencies and use that money for, do I have to disclaim everything I'm going to do prior to getting the loan, I guess is the question I'm asking. Okay.
You have to. Let me kind of go through that, but let me finish first on what is required on the streamline or not required on the streamline as opposed to the full. A streamline does not require a general contractor unless you have more than 3 bids. So for instance, let's say I did one recently where they went to Home Depot, and at Home Depot you can get your appliances, you can get your your new flooring, you can get your paint, you can get all kinds of stuff. You can buy all kinds of stuff. So that was one bid. They ended up having some asbestos. They had to take care of on the outside of the paint. So they had a painting contract, okay? So they had a painting bid, a Home Depot bid, and then they had one other, I can't remember what it was, but just one other bid. So they only had 3 bids, so they did not have to hire a general contractor, which saved them money.
So they can be their own, they can act as their own general contractor essentially, or hire Home Depot to do work.
As long as they don't have over, as long as they don't have over 3 bids. Now,
and less than $35,000 in total improvements.
Now this is Texas law. Other states will allow a borrower to be their own general contractor. Texas does not allow that. And when I say their own general contractor, like even though they went to Home Depot themselves and they got everything, they're not acting as their own per se general contractor. They just got the bids together. And Home Depot is going to come out and do their thing, and then the painter's going to come out and do their thing. But some states will allow you have 10 bids, whatever. Some states do allow that borrower to be their own general contractor.
That's a good distinction.
Not. Yeah.
So check with your individual state laws on those types of items.
Right.
And of course, that's a protection to the consumer, because they think when you're getting past 3 different sources, you're starting to get into a little more complicated renovation. And so as a protection to the consumer in Texas, they say you really need to have a professional involved.
Mm-hmm. Correct. Then on the streamline, you do get at closing 50% of the funds up front, right at closing. So you can, go ahead and get everything from Home Depot paid for, or you may have to wait a little bit on the painter. The painter is going to get paid at the end of the job. You kind of have to, as the consumer, you're going to have to finagle that just a little bit if you don't have a general contractor. So you get half at closing, and then you get the other half, or not you, but your bids are paid at the end when everything is complete, the other half. Then if there's any of that 10 to 15% contingency that's left over, it can either go back to the borrower or it can go as a principal reduction, either one.
Oh, very cool.
Yeah. Then on the streamline, either anytime you have a general contractor, Texas does not require that, or general contractors are not licensed in Texas, but other states they may be. So if you're in a state that requires a license, you need to make sure you get with a general contractor who does have a license. You don't want them just to say, hey, hang a sign up saying I'm a general contractor, and they don't have all the licensing. So make sure, what your state does or does not allow.
And I think the key also is that on these loans, we require $1 million insurance policy on behalf of the contractor. So that knocks out the fly-by-night type entities that need some front money, and you may or may not ever see the work actually get done. So you do want to protect your consumer and make sure that you do a little bit of due diligence on the contractor. We ask for a resume, we ask for a W-9.
You have to have that on the 203K. That's a HUD guideline.
Exactly.
You have to have on any of your contractors or subcontractors. So let's say you had 3 bids, and clearly Home Depot, Lowe's, you don't have to get a copy of their $1 million insurance because they're Home Depot and they're Lowe's. Now, if you go to some little mom and pop appliance store in town, then yeah, you're going to have to get it, because copy of their $1 million of insurance, because they're not nationally known.
But like anything we do with our clients, we're looking out for their best interests. So we want to be able to look at a contractor and say we feel good about this contractor, because if we don't, then we could end up having challenges on the construction. And this is, remember folks, this is a little bit like an interim construction loan that we're building a house, or we're rebuilding a house, we're remodeling. So take a little bit of care for your borrowers to make sure that you're doing this. But I want to be real clear though there's some moving parts here. All you have to do is have a checklist and just go off that checklist. Now, you need to have a processing team that's familiar with 203K loans, or else you're going to have a challenge with that. And I strongly recommend that you have the ability to do everything in-house. I would not be looking at this loan program if the only way I had to do it was brokering it outside. So
that's a nightmare.
That is a nightmare. And that's where people have this reputation of saying, oh my gosh, I don't want to do those loans because there's too many moving parts. It's not like your regular loan. But that's where the beauty is, because there's so few competitors that can do a good job on these that you can open doors to new realtor relationships. So we're going to talk about that a little bit later. All right, so Joy, is there anything else that you want to highlight before we move on, difference between a full and streamline?
No, the one thing that's common between the two, and Paul, you asked about this a little bit, at the beginning, before you ever even turn the file into processing, you have to have the bids from everybody with, with their license, if there is one, with 3 references from each contractor. Your processing team has to actually check the references and write down what they say. You have to have all of your numbers just locked up tight. I mean, you can't vary from, once you get that bid, those bids, you actually transfer with it. In our company, we do it we transfer their bids onto a sheet so that every bid looks the same. We attach the bids to the sheet, but it's like a cover sheet of, here's everything that we're going to do in the kitchen, here's everything that we're going to do in the bathrooms and whatnot. So all of that has to be locked down tight before you ever submit it to processing. Now, your processing can help with that kind of stuff. Like my processors actually, gather a lot of the documents from the contractor and that sort of thing, because that's probably one of the most time-consuming parts of it all, is because contractors are busy, they're hard to get a hold of, they're always in their truck. They, to get them, to tie them down to say, you've got to send me all of this stuff, that's probably the hardest part. So, and if that's the hardest part, that makes the rest of it pretty easy. So. Okay,
so now I'm going to recap. Full is any structural improvements, any foundation work over $35,000, and you're going to have a consultant that's going to really help oversee the whole process, both for us as a lender and really for the consumer's benefit as well. Streamline is under $35,000, no structural improvements, but you can do a lot of cosmetic improvements: kitchen, bathroom, flooring, wall, the meadow with the horses, as you said, wallpaper goes away, balls. Now, this is an important thing to note. On the full or the streamline, you cannot use it for what HUD calls luxury items, meaning.
Yeah, I meant to talk about that.
Okay,
you can't do luxury items. You can't do swimming pools. You can't do spas, anything like that. Full, you can do landscaping. Streamline, you cannot. That's a big difference between the two.
So an outdoor hot tub, a swimming pool, those kind of items cannot be done on these loans.
Outdoor cooking center, can't do that. But you can do landscaping on the full.
And I'm going to have to lobby with HUD about not being able to do an outdoor cooking center. That's just wrong.
It is wrong. And a theater. I need to have an inside theater, too.
There you go.
Yeah, exactly. Let me say one more thing, because this was a gotcha that got me on one of my loans. We went into it as streamline. It was streamline all day long. They were doing nothing structural. Well, we get the bid from the general contractor, and they were going to put up some kind of a decorative header above the outdoor, outside door, above the, on the patio, above the deck, and just, it was cosmetic. But the way the contractor worded it on the bid, it sounded like it was a structural header to a door jamb, and it was not. But we could not, once the underwriter saw it that way, there was no going back. So I didn't do the due diligence on that one to say, ooh, this sounds structural. where we even took pictures of it. It was clearly decorative, but we had to flip that one to a full, and they had to get a consultant because of those couple of words on the bid. So I caution all of you, just look really, really with a fine-tooth comb, look at your bids.
Well, and one of the things, and I thank you for bringing that up, Joy, because one of the things that we always want our members to do is learn from our mistakes, so you don't repeat those mistakes. But I think the real key is you need to interview that contractor. Don't just let the borrower say, well, you know, my cousin's buddy is a contractor. You need to interview them and make sure that they will understand the program, and the consultants can help you with this, by the way. Now, one of the things, just a little bit of a niche lead in terms of marketing, and I think is really, really neat. As interest rates increase, you're going to have new home builders who are going to have their markets shrink significantly. But they already have subcontractors. They already have superintendents. A renovation job for them is really easy. So I'm actually going to some builders and saying, you know what's going to happen. You've been through the cycles before. It's inevitable with what's going on with the government and printing all the money. We're going to have interest rates go up. You're going to have your new home market shrink. How about if I give you a way that you can still make, tide you over to that next cycle, still make money, still have your superintendents and subcontractors stay with you by doing renovation loans. And so we're working, and here's the big thing, Mr. and Mrs. Builder. What if you weren't exchanging 18% margins for 40 to 50% margins? Now, see, what we're doing is we're going to go with a turnkey system with people that we know and trust, that know what they're doing from a construction perspective, and we're going to joint market to consumers for people that need to have homes renovated. So great strategy there, something that we're actually working on with one major builder and have had some discussions. The one thing that he asked, well, I thought about doing renovation loans, but I don't know how I get my money. I said, what if we controlled that process and you can turn your money in 30 days as opposed to 90 or 120 as a new construction? Immediately the light went off, and he was like, I'm all ears. How do we get this implemented? So that's a little twist. Joy, thank you very much for your time today and sharing the difference between full and streamlined from a senior loan officer perspective. We greatly appreciate that.
Love that, hearing it from somebody that's actually done them over and over again. So it's good to hear that stuff. Thank you.
Let me add one thing, just kind of on a time, is trying to save time in approaching builders. Again, I said the slowest part of the process is getting your contractors to give you their insurance, their references, a copy of their licenses or whatever. That's the slowest part. So if you have a builder partner, you only have to do all of that once. You get their information once, you keep it in your file, and every time you do a loan, 2 or 3K loan with that builder, you've already got all that done. And that's huge, because
that's an excellent point, actually. And I think the other thing is that most of the people that come to us don't have a contractor when they come.
No, they don't.
So you can add
and your
some
good
value.
Consultants know contractors, by the way.
Yes. And they can introduce people like ourselves that have this product in-house turnkey. They want to do it with us because they know that the broker deals are a nightmare.
Mm-hmm.
Right.
And
okay.
It will take time and time and time. Awesome stuff. Thank you again.
You're welcome.
All right, so the next part of that is, why is an FHA 203K so important in today's market? And through the research that we've done, there was Realtor Mag. For those of you who don't know, it's the official magazine of the National Association of Realtors. Did an article in, I want to say, July 18th. There's the date on the pickup that I did, July 18th. So just a couple of months ago, did an article on a survey that was actually done by Realtor.com that a majority of homeowners are planning to renovate. As a matter of fact, the statistic, and this is what really kind of grabbed me, Chad, when you first started talking about it, and I did this little bit of research, and I saw the statistic, 67% of homeowners say they're planning a home renovation within the next 6 months, according to Realtors.com, home improvement survey, 1,500 homeowners were basically asked, and 2/3 of them said that, yeah, they're going to do a home renovation. They're going to do some sort of repairs. They're planning to spend more money on renovations this year than they did last year. And that goes along with what you've been saying over the last couple of months, that this is something that's coming. It's coming full circle with the infrastructure of homes in the United States. It's important right now, more so than ever. And just so you know, guys, this is being told to the real estate agents. So the realtors in your area know that this is something that's very important. They know that this is something that is top of mind and is going on right now in our country.
Well, let me add to this too, Paul. If you want to get the attention of your realtors, you not only share this, and they may say, well, that really doesn't impact me. Somebody's going to improve their home. They're not looking to buy a new home. They're not looking to sell their home. But the survey also indicated that 20% of the 67%, after they did their improvements, were looking to sell their home prior to the end of 2014. So people were going to go in and put some new flooring in, dress up the kitchen in an attempt to get ready to list it. So if we educate our referral partners, then we can show them that's a way that they can increase their business. So if they get on board with this, we can do a 203K for their past client database and improve their property. They can coach their borrower or their sellers about things that will be a good bang for their buck to stage their house for a resale, and then they get a listing out of it so they can bring some more value. So again, educating our referral partners about how this can help them build their business is a real key.
Absolute real key. So I'm sold. I'm convinced. I get that it's an important product. How do I get the word out to everybody? And so there's several ways to get the word out. The first is, and you talk about this quite a bit, and Joy has been absolutely fantastic at this part of it, is branding yourself as an innovation specialist.
Yes, you know, there's, again, going where competition does not go. There are not very many lenders out there that brand themselves as a home renovation specialist. That's a real key.
The other part of it, and Joy kind of touched on this a little bit, she called them consultants, and I called them inspectors in the slide here. But, you know, I love 203K consultants or inspectors. What I mean by that is Chad kind of touched on it just now, is creating and developing those relationships with those consultants or inspectors, so to speak. You know, you said it yourself. They would love to be able to do business more so with you guys, just because you've got the in-house part. Now they're referring people that are coming to them. I can't imagine that consumers aren't going directly to these consultants and saying, hey, I'm looking to do this. What are the steps I need to take?
Well, and as you show that you have the ability to do this in-house, Paul, you're going to find that some people, the consultants, will be meeting with a consumer, and they find out that the lender is brokering the transaction, and they just might give that consumer a heads up, say, you know, we have a lender that can do this turnkey in-house. You might want to talk with them.
Okay. Which is, I mean, that's another avenue of referral networking. I mean, that's what it's about.
And remember, the consultants don't have any work until we bring the 203K loan or somebody brings them a 203K loan. So don't be, shy about considering ways to put together a home buyers renovation or a home renovation seminar, have a consultant as part of your program, have them sharing in the expense of that. There's just so many different ways that you can think about, from networking their professional reputation to generate additional business for all of us.
Absolutely, levering those relationships. And you kind of spoke about builders and home remodelers just moments ago. I mean, they're looking for this kind of work because it's easy, guaranteed pay work.
Absolutely. They don't have to worry about is the consumer going to come up with the cash at the end. They are guaranteed the funds because we as a lender control that. So if they get the work done like they're supposed to, then they get their money.
That's a huge thing for people in that business, in the remodeling business. I can tell you from experience, getting the money from insurance providers and things like that, or directly from the homeowner themselves, can be a difficult task. So it's a benefit to those remodels. They would love more opportunities for these kind of transactions in their business. So another big part of it, and this is one that you kind of pointed out to me that I hadn't thought of. I mean, the obvious things are the referral partners, but home and garden shows, that's one that I never really considered, but when you think about it logically, that's a great place to set up a booth and be able to, those people are there because they're interested in remodeling or doing something to their home.
Absolutely, and it serves two purposes, Paul, because you're not only dealing with consumers direct, but you've got a target market right there of your remodeling companies that need some cash funding sources. What better way to network than to have a booth and then go down, each aisle networking with a bunch of remodelers and set up some partnerships. I mean, excellent target marketing both for consumers and for remodeling partners.
I can only imagine that there's not a whole lot of lenders that are setting up and talking about, renovation loans at home and garden shows. So what it's also doing is, we talked about branding yourself as a renovation specialist. Just by being there, the perception that you're giving to everyone around you is that you're a specialist in this. This is what you focus on because you're there.
Absolutely.
Now the big one, and I know this one is your favorite on how to get the word out.
It's my favorite for a couple of different reasons, Paul. First off, if I was to, be landing in Alaska and had never done any business there, the first thing I would do is try to build realtor referral relationships. But if I'm a newbie to town and I'm not bringing anything of real value, it's going to be more challenging. So to do a class where you're teaching realtors on the benefits of the renovation loan to expand their portfolio is an excellent way to get in front of 10, 15, 20, 40, 50 realtors and brand yourself as an expert in this arena and start leveraging that with new referral partners. Because if you can show them, the conversation goes pretty easy. If I can help you with a tough one and do a renovation loan, can we establish a partnership? And I can show you how we can do that. Great. Can we establish a partnership to do some of the easy ones also? So it's a very, very good lead-in to expanding your realtor referral base.
Now, do you recommend getting a class like this CE certified so that you get the 40 or 70 people in the room? Or, right off the bat, you want to, the goal is to just do it, but how do you feel CE versus non-CE on a class like this, on this type of a class?
I would prefer to go the CE route, but with this caveat: don't slow down, don't wait for that part. We're in the process of getting our own, in the state of Texas, you have to be an education provider, so we're getting our own provider network so that we can have any of our loan officers in Texas, I can then have them be able to do CE classes and certify them as an instructor. But don't wait on that. Certainly you can still have a lot of people, and again, you appeal to the pain issues that realtors may have. A marketing piece might be, do you have an ugly duckling home that's, it's in a good area, but it's got, green shag carpet and the kitchen needs to be redone and the bathroom has the horse wallpaper out in the meadow. Well, then we've got a solution for you. Come learn how we can help you from a renovation perspective, but either before your client puts the house on the market, or we can actually put some materials in the home that says this home is eligible for renovation financing.
And so as far as CE is concerned, guys, every state is a little bit different. It's very easy to find out what your state requires. Like, you take the state of Texas, you have to be a school and a certified instructor, so you have to be both. Same thing in Florida. But then you take a state like Washington, for example, where you only have to be a certified instructor through the state to be able to give CE presentations. So each state is a little bit different. To find out, just get in touch with the I believe it is the real estate board. Yep, the Real Estate Board of Commissioners, and they'll have a customer service representative that will be able to guide you through it. I've done it several times with several lenders over the years where we pick up the phone, make one quick phone call, the forms are emailed to us. Depending on how frequently your board meets may determine how much time it takes for you to get that certification. But once you do, it's game on. They will give you every regulation you need and exactly how to format your class so that it gets approved, and it's game on from there. And that's a built-in. You could do that, every month and have 70 people in a room and have built-in who you're going to follow up with for the next 30 days, ongoing all the time.
Well, the other thing we talked about were homeowner seminars, maybe where we, joint venture with a construction company or a builder and consultants. Well, when you have on there that you're, certified by the state of Texas Real Estate Commission as a 203K continuing education instructor, that's part of your tagline on your handouts and what have you. That's just, again, a little extra credibility builder for folks. And the same
Branding
thing
yourself
for the
as
realtors.
that specialist.
Absolutely.
Branding yourself as a specialist. That's what it's all about. Videos. This is a video that Joy did, and I tried to, guys, in the PowerPoint, just so you know, when you download a copy of this, you'll be able to play Joy's video right from the PowerPoint. I thought that maybe the audio would come through when I upload it here. Unfortunately, the audio is not coming through on the PowerPoint itself, but it's a 2-minute video of Joy talking about that, she's a lender in Texas and she does a specialized type of loan and a specialized type of program, gives a little bit of education, not over-educating, but a little bit of educating, enough to wet the whistle, but enough to prompt more questions. And then the call to action is, hey, if you've got a property like this or know someone that does, pick up the phone and give me a call and I'll be happy to help you. Does the same video. Oops, I hit the wrong button. That's the button I wanted to hit. Make the same video for your past client database too, because again, it's not just for purchase. This is a great refinance opportunity for you. It gives you the excuse to start talking refinance with some of your past clients when the rates are not where they typically are to talk about refinance.
Absolutely. And so, and what we're doing is we're not just going to our existing referral database. We actually, as a lead-in, we're doing this statewide. We've got a list of real estate agents across the entire state of Texas, and we're marketing to expand our market to be able to do these type of loans in other markets.
And that's what this is you're doing this one for Allen, Texas. This is another strategy. You guys all remember we've talked about it a couple of different times with the active range strategy, utilizing specific search engine optimization tactics, not tricks, but tactics to get search engine optimization or SEO results on Google. And those things, it's all about the FHA 203K renovation loans.
And we do those by community, as you know, Paul, but I did a quick review. It's amazing how many views these articles are getting. Literally, we have had thousands and thousands and thousands of reviews on our articles, on our active range postings that are unique to individual sub-markets, identifying, again, just the 203K. Now, one of the things we're going to do now going forward to use that video for the consumers that you're talking about, we're going to do a link to our YouTube channel within the 203K articles on active range. So that's an additional enhancement we're going to do, and Google will love that because we've got a YouTube video in there, and they own YouTube. So that'll help us get to and maintain even more search engine optimization. So again, think of layering when you're marketing. That's something that I'm always really big on. How do you differentiate yourself from your competition, and how do you leverage doing a video, and how many different ways can you use that within your marketing game plan to kind of, again, have that layering effect of marketing.
Awesome. And that stuff is fairly easy to do once you have that initial article written, because then you just spin them from there, and it's it's ongoing stuff.
Absolutely.
So I know how to get the word out now. I'm excited about the program. How do I actually get this done? And we kind of talked about that when we talked about the differences between the full and the streamline. How do we get that done? Educate yourself first and foremost on an FHA 203K loans. What do they all mean? Now this is, we're going to provide this for you. This is just a document that came directly off of HUD's site that goes into absolute detail of what all a 203K rehab program is. In detail, I think there's 6 or 7 pages in this document that it goes into detail. We're going to provide that for you. It'll be part of it. It'll be downloadable with today's class, so take a peek at that. If you want to get a jump on it, head over to the HUD site. You can download this yourself from there. But just wanted to make it easy on you for the education part of it. And we hope that we're educating you enough today to where you're dangerous, but make sure you know all the ins and outs, all of the requirements. Especially, get with your lenders if you're brokering, find out what they require to do these loans too, so that you can create your checklists. And that's the next part, is having these great checklists to be able to really, and I keep coming back to the word streamline only because it's part of this loan, but streamline the process for yourself. And so the first checklist would be like a timeline and workflow. So kind of go through some of these things, Chad, and explain what that means as part of the timeline and workflow.
Well, obviously you have your contract execution. If it's a purchase money type situation, you won't have a contract if it's a refinance opportunity. Depending on if it's a full or streamlined, then you certainly have to have a consultant. If it's a full and a feasibility study, don't let that sound real complicated, folks. It's really not. These consultants do this for a living. They are experts at it. They have to be certified by HUD. They actually are a great resource for you to help educate yourself. Take them to lunch, ask them a few questions, ask them about the nightmare issues, differentiate yourself from your competition, saying I've got the ability to do these in-house. And then if it's a streamlined, then you're going to have a standard home inspection. Bid collection, Joy touched on this, that should be done right up front. So you see how many bids, and you want to look at the language on those to where you don't have the gotcha that she had of the making it look like a decorative header was going to be a structural improvement. So obviously you have your appraisal contractor approval. That includes getting a copy of their E&O and liability insurance, $1 million policy. And then you're going to provide all that information to the appraiser so that they're going to do an as-completed appraisal, not an as-is. And that's going to, all that information has to match. You've got to have your consultant, your contractor, and all that information has to be provided to the appraiser. Obviously, we get that final approval clear to close, and when we start the work, we disperse the draws, less what's called a retainer, which is 10%. And after the job is completed on a full, then the contractor gets the residual of their funds. Final inspection, release the 10% contingency reserve, and you're ready to go. So the thing is, we're going to provide you the checklist that we actually use on a day-to-day basis in our operations. And I think, Paul, it's important to note here, you and I talked about when we were putting together Mortgage Mastermind Group, we're talking about loan officers here. We're talking about trying to provide value to help people build their business and make more money and have financial freedom in this industry. And there's so many of these other training companies that I look at, and it's the shiny object type thing, and or the marketing strategy of the week or something, and they don't talk about loans. And we wanted to make sure we talk about loans because that's how we make our living. And so.
And give you easy ways to do it. Here is that checklist. This is the actual working checklist that you guys work off of, isn't it?
It is, absolutely. So, complete the contractor checklist, the resume, get the W-9 for the contractor. The loan permit cert has to be completed by the FHA consultant in case of a full, of course, et cetera, et cetera. I don't want to bore anybody, but yes, we're going to provide you the actual checklist that we utilize for our loan officers and our processing function in-house and that we do on a day-to-day basis.
Which is, this right here is the time saver. And once you've educated yourself on this, the checklist will make a whole lot more sense to you, and it's done what I, kind of talking about, it's done in a way that it leads you from what has to happen first all the way to what has to happen last, so that you can submit that loan and know that you're not going to have one of those kickbacks or one of those uh-oh moments at the end of things, because you've got the pieces to the puzzle all in order, all ready to go. And when we first started talking about this a couple of months ago, you had made mention, and several people said, oh, they're so difficult, they're so tough to do. They're tough to do unless you have a process in place. Once you have a process in place, it becomes just follow the steps. It becomes a paint by numbers, and anybody can paint by numbers. All right, so the wrap up. The big things about what we covered today. First thing that I want you to remember, 67% of people are interested in renovating or remodeling their home in some way, shape, or form. That's 2/3 of people that were surveyed. That's out of 10 people that you meet, 7 of them, homeowners or home buyers, are interested in renovating their home loan. A big one that Chad found that was, here's a crazy number for you, the average age of homes in America is 40 years old. 40 years old.
And Paul, that was a National Association of Realtors study that's conducted recently. It was distributed on August the 11th of 2014. So we're talking about information that, is just over a month old. They surveyed 132 million homes in America. Now listen to these statistics. 14% of those homes that they studied were 0 to 14 years old. 55% of those homes were 15 to 54 years old, and 31% were 55 to 95 years old. So you have 86% of the homes in America that are over 15 years of age. And I will tell you from experience of being a homeowner, a couple of different houses now, you get about 15 years into a house, you're going to need to do some updates. so
at least a little.
Yeah, so you have 67% of the population stating that they're going to do some renovations, and you've got 86% of the homes that are over 15 years of age, with the average home being 40 years old. You think any of those need to be updated? I mean, this is an enormous market, folks. I mean, and this is the real key, like you just put up there. National Association of Realtors are telling their agents these statistics. So
they're putting it out there for a reason, and National Association of Realtors is a group large enough. They don't do things just because, here's some cool information to put out there. They do it with a purpose, with a plan, because they'd like people to implement. They put this information out there because they want their real estate agents. The better the real estate agents do, the better that group does. And so they put this information out there so that the agents know what's happening in today's marketplace. And this is a trend. This is not just, I hope that some people want to do some renovations. This is a cool loan that maybe if a few people, this is a trend that's happening all across the United States of America.
Well, and when you do your continuing education classes, and I just made a quick note to myself, Joy needs to do a separate video now just talking about these statistics that goes out to realtors. So another way to get to continue to brand her as a renovation specialist, she's bringing some more information from their own trade association to take back to the real estate agent. But remember what I said before, of the 67% that said that they were going to improve their home in the year 2014, 20% of those people said they were planning on then putting their house on the market. So if you can educate your realtor referral partners and prospective referral partners, which I want to really key in on, this is the way, a specific strategy that you can increase your number of referral partners, because they don't have a specialist that can do these loans in most instances.
Mm-hmm. And that's you branding yourself as that specialist. They turn to you for questions about this because they look to you as that expert or that specialist, and they tell their colleagues, oh, you've got a renovator, you need to get in touch with Paul over there. He is the specialist in it.
Absolutely.
That's how
I would say get in touch with Jory Bates.
There you go. Exactly. All right, so that's what we've got for you for today, guys. We want to open up this opportunity for some Q&A. I can tell everybody's pretty engaged in this. Everybody was kind of watching what was happening and listening very intently. No questions popped up during, which is highly unusual. What questions do we have? I'm hoping that you guys didn't want to miss any of the great bits of information we were going over. But what questions do you have about what we covered today? About FHA, 203K loans, about the difference of streamline versus full, about some of the things that came out about the consultant or inspectors, whichever you prefer to call them. What questions do you guys have about this program, this niche, the niche loan program that it is? I mean, it's the same as talking about VA loans. It's the same as talking about reverse mortgages. But guys and girls, I'm going to tell you, with the statistics that are coming out right now, this is so much bigger than VA, or bigger than, reverse is another big one, because there's so many people. That baby boomer age group is hitting that senior status now and are qualifying now for reverse, so that's a big one too, and we will cover that. But this is huge, guys. Steve's got a question. Are there any restrictions on who can do these? On where you can do these. Excuse me, on where you can do these.
The only restriction would be if you can do an FHA loan, you can do them.
Okay.
So there's no, it's not like a USDA loan, for instance, that has to be in a certain geographic area. There are some programs that used to be out there for renovation, and they were kind of designed to try to renovate certain parts of the town that might become blighted or something like that. That is not the case with these loans. If you can do an FHA loan on the house, you can do a 203K.
And that's the kind of thing I was thinking of as well. Is this only available in the really dilapidated parts of town because they're trying to beautify, doing a beautification project? But this is, in my neighborhood, I could do this all day long, and the neighborhood down the street, you can do it all day long. It doesn't matter.
Well, and with the builder that we're going to be partnering with, we're going to be identifying an area that we know that there's an excellent school, excellent elementary school, very little turnover in the houses in that area because people want to be in that area because of the schools, but they're now 15, 20 years of age, and so they need renovation. So thinking in your marketing about how can you do, and what we're going to do is we're going to do some door hangers and some direct mail pieces, nice full color pictures, talking about our expertise as lenders, talking about our builder's expertise because he's built thousands and thousands of homes, and we're going to market direct to consumers that way also.
I can see Alan already putting, I bet you $1 Alan's already got a send out card ready to go for it.
There you go.
Well, great stuff, Chad. Thank you again. For me, I mean, obviously I'm not a loan officer. I haven't been, and so for me this was a really, really big education. I learned a ton about this particular program, a lot of things that I didn't know, especially like the differences in the full and the streamline. It really boils down to, is it structural or is it cosmetic? I mean, it's that much. I think knowing that, somebody can't get one of these loans if they're just looking to buy a house and put a pool in the backyard, the exclusion of luxury items, that's a big thing to know going in, because you don't want to sell this program to somebody, turns out it's a luxury item, and poof, you've now blown a relationship or any opportunity of not only that deal but any future deals as referrals. So a big education for me on today. I can't tell you thank you enough, Joy. We appreciate you coming and sharing your knowledge with everybody as well. Looks like we've answered all the questions. Guys, girls, thank you so much for spending a Friday afternoon with us. We greatly appreciate it. Any comments that you have, anything that you want to let us know, please feel free. Head over to the facebook.com/Mortgage Mastermind group on our fan page, and I've got a little picture of a house with some tools around it representing renovating on a house, so give us some comments. Let us know any questions you may have about that, and we will look forward to seeing you right back here, same time, same channel next week. Have a great weekend, everybody, and be safe.